So I'm sure you guys don't need any introduction for many of the crowd here, but let's do that anyway formally. So we'll start, Nigel, with you. So please tell us, in short form, your Twitter version.
Twitter version. Thank you, Brett. Name's Nigel Verdon. I'm CEO and co-founder of Railsbank. Previously, I founded a business called Currency Cloud. Before that, I founded a business called Evolution, which we exited, and that's now part of Bridge Aerospace. We've been in this fintech world since the early 1990s, when it wasn't called fintech, and did the very first foreign exchange trades on the internet, while other people are using lastminute.com to book holidays. We're doing institutional trading. Delighted to be with good colleagues here. We know well.
Marco?
Hello, my name is Marco Wenthin. I'm a co-founder and chief commercial officer of SolarisBank. And yes, the first, as we say, fintech company with a real banking license, and actually hopefully proving the concept of business as or banking as a platform right. Myself, I've been 27 years in banking and finance, doing a couple of things, and especially for the traditional bankers, I've been working together with Sofortüberweisung. So PSD2 is a thing with, as opposed to traditional bankers, I love. So let's see what comes out of it.
Cool. And Daniel?
Thank you, Brett. So I'm Daniel Döderlein, serial entrepreneur, built my first company when I was 17. I can't really say that I've been in fintech for as long as you guys, but I'm still sort of bubbling up as one of the old timers.
Are you suggesting we're old?
But I'm sort of bubbling up as one of the old timers. I mean, I've been in this game now for 15 years. Started Auka, which used to be called Mcash, the first mobile payment technology platform provider out of the Nordics, in 2006. First one to obtain a license as a payment institution in the EU. And we've struggled hard to revolutionize the world of payments, and we're now a number one provider of mobile payment platforms to banks. We're selling all the experiences that we have from the Nordics to banks globally. If you want to do your own Alipay, Vips, mobile pay, you can talk to us and we will deliver it for you.
So Auka.
It's Old Norse, Viking language. It means increase or intensify, and it starts with an A, and it's really short, so Google likes us.
And we just found out that there is a bottle of wine that has the...
Oh, yeah.
So
I need to buy a couple of cases of that.
That uses that brand. So did you have it trademarked? But not in the wine category.
Not in the wine category. Yeah, it's a trademark. Auka is a trademark, but not inside wine. So I'll have to buy...
Maybe you can use that as leverage. Anyway, so let's get to definitions first of all. Of course, it was just a couple of weeks ago we had the formal open banking launch in the UK. Not much has happened with this, but how would you guys define open banking?
I'd define open banking is, sounding more technical words, it's access to your banking capabilities, whether it's issuing bank accounts, receiving, sending money, and alerting to it, using APIs. So your machines, your technology can talk to your bank using technology without using a mobile app or without using a front end or going to the branch. So it's really automated access to banking, use it through APIs. And then it's also the ability to access data, do things like send and receive money through APIs and automation. That's what we see as basic open banking.
Yeah, so I have my definition of open banking, which is basically separating into two. So the one thing is coming from regulation here in Europe, known to everyone, PSD2. So the first part of open banking is that you actually supply the RTS required APIs to enable third parties to chug along at your data on behalf of your customers, which is required. So that's sort of level number one. Level number two, which is my definition of true open banking, is that you actually open up your core services to a larger extent than what is required by law, and you actually make it into a business model as a bank. You're providing some of your core competence and some of your core features for third parties to enjoy. And that's the way I define it. So one thing is by law, the other thing is by business.
I subscribe to everything what you just said, but I'm not repeating that, and I'm not looking just at from a banking perspective. I'm rather looking at this from a customer perspective, because what it essentially is putting the customer back in the power of his own data, and really bringing him back as the decisive factor what can be happened with his data. Because when you just talk about it, and many discussions you have, that's it is being said, well, it's customer data, these are mine, and you can't access them, etc. But then you actually have to look at the word customer data. It's pretty clear who these data belong to. and it's not the bank.
So obviously UK just did a big deal. We have PSD2. Who do you think leads the world from a regulatory perspective in terms of opening up banks for access to data?
Well, so obviously the EU is pushing the envelope. I mean, if you look at the regulators and the lawmakers in the EU, there's no part of the world, as far as I know, that has such a huge push from the regulators, from lawmakers, to take such a large portion of people's data and payments and transactional information and forcing it out there in the open.
So why do you think the regulators have been so, I guess, forceful about this, so direct?
Well, if you look back to 2007, 2008, especially if you are connected into the Treasury in the UK and others, the complete sort of mess is the politest way to describe it, that the whole financial system got themselves into. And the fact that we as taxpayers had to bail out people we shouldn't have to bail out, and governments had to bail out people we shouldn't bail out. There was very much a drive towards this can never happen again. The government can't be held to ransom by a single institution at all. So if you look at it from a very political side, and I think probably the most is sensible too, removing that cabal of control and having one set of institution, one industry have a gun to the head of a government and a people, by opening it up, they want to see if it's able to systematically remove a lot of the risk and control from a few core institutions. That's our view from back in 2007, 2008.
I think that's a very proactive view, which you think there, but I think it's more an reactive view on the whole thing, because looking at the technology and what everything has been provided, how everything is moving, the banks were just lacking behind this movement. So I guess this was just coming because there were services out there which were already accessing the account, etc. It's not that it is being allowed now since 2 or 3 weeks. It's been there for over 10 years now, and the regulation just followed what was already happening in the market anyway. So that's why I think it's whilst you see this from the more, let's say, systematic view and a proactive macroeconomic view, I just say, but they just had to follow what was happening anyway.
Well, I think there's two sides to that story. So I totally agree in terms of being proactive and also reactive. So on the proactive side, me being one of the fintech companies very early on, that in our business model, we needed to have access to money. Right? In order to serve any customers with financial services, you needed access to people's money in order to do payments and give them any valuable information and services. So PSD1 was driven for multiple reasons, but it was also driven, if you read the introductory papers of the work group that actually constructed PSD1, it was also due to competition. So lack of competition and enabling a new service innovation for consumers and merchants because of the monopoly situation that we in fact have, not necessarily looking at the banks, but looking at the schemes surrounding the banks, the Visa, MasterCard, the interbank clearing systems. They're all quite proprietary, closed down things, even though that they're internationally available for the contenders of the schemes. So if you have a banking license, you're allowed to play. If you don't have a banking license, you're not allowed to play. And if you read the introductory papers, they were very deliberate about wanting to open up this to drive innovation, which in turn is going to give you new, better services. Now, the conversion between PSD1 and PSD2 is driven by the results of PSD1. So PSD1 was not deliberately forced into law, and it was open and susceptible for interpretation in each various country that wanted to implement it. So the lobbyists representing the schemes and the banks are very good at defending some of the core infrastructures that guys like us needed in order to provide services. So we got a new license type, but we didn't really get any access. So I could flag and say, yeah, I have a license and I'm allowed to do all kinds of crazy cool stuff, except I don't have any access to anything, so I can't really provide anything. Thus, PSD2 came around, where they're very deliberate about not doing the same mistake as they did with PSD1, which is to force everyone to open up. I think it's both proactive, but also then reactive. Reactive in the terms of what you said. We saw, following PSD1, when guys like me didn't get the access, but got VC funding to innovate, we had to find other ways. Now, I didn't do it, but there's a lot of companies out there that...
They just did it.
Yeah, and they were dependent on, for instance, screen scraping and doing all kinds of
like
creative,
the Yodleys and so forth.
Right. So they found all kinds of creative ways of solving the problem that the regulation didn't solve for them. And kudos to them for doing that. That's innovation by definition. It's awesome. The problem is in hindsight that it's not really secure. It's not really catering to the needs of the consumers. They're trying to produce awesome services, but on the back of that, you can't really trust them. You're handing out personal information. So it's both reactive and proactive.
So just, Nigel, before we jump into this, I was in Hong Kong in December, and Norman Chan, who's the head of the HKMA, gave a speech about open banking and opening up Hong Kong from a regulatory perspective to more innovation and more aggressive competition and so forth. Cross-border, he basically, I think they'd looked at all the most progressive regulators and sort of took a shopping list of all the stuff that all these other regulators were doing and said, we're going to do all of this. Sandboxing, open banking APIs, cross-border stuff and so forth. But he made an interesting point, and he said, we left it to the incumbents, we gave them their chance, and they were just innovating too slowly. And for Hong Kong to maintain its leadership as a global financial centre, we need faster innovation, and this is why we're having to force banks to work with fintechs and encourage fintechs to come in. Do you think do you think we have seen in Europe, particularly at the front end in terms of data visualization, that is also the case, that the fintechs have set a new bar, and so the regulators are saying, you want great customer data visualization and data access, these are the guys to work with the data instead of the incumbents?
There's two points on that. One is if you go back to the competition piece, banking is one of the few industries where you have a fairly mediocre product. The competition has a fairly mediocre product. You encourage a switch, and there's pretty much no switching because you get another mediocre product. Because current accounts, there's nothing differentiated about a current account. So why switch? It's all equally as bad. So that was one of the things which, again, was opening up to say, how can we make this more competitive? Because the product, by definition, isn't competitive at all. So that is where we also believe the regulator is coming from. And in terms of, it's interesting, the Hong Kong regulator being TLA compliant and everything, which is good to see. But by opening up to also the incumbents have one huge issue is to run the bank is a massive cost and a massive cost of regulation. You look at regulation for all the products in the bank for the next 5 years or 3 years, you've got nothing but compliance projects.